You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310 and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.CFRN.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.CFRN.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today's Friday, 7th day of August 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. When you join that way, you have access to the chat box so that you can participate in the discussion. But if you're out of the office, away from your desktop, not to worry, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have the chat box. You could also join a couple of other ways. We stream live during this broadcast on YouTube, Facebook, and Twitter. Let's open with a word of prayer. And today our opening prayer is going to just be a scripture about prayer. And you're all familiar with it. 2 Chronicles 7:14. When the Twin Towers fell, it was on every t-shirt, every bumper sticker, every time you turned on the TV or the radio. You know what I'm speaking of. And I've chosen this as our opening prayer today because, well, no towers have fell in the physical. But this year so far, how much has fallen in America? Join me in prayer. 2 Chronicles 7:14 says, "If my people, which are called by my name, shall humble themselves and pray and seek my face and turn from their wicked ways, then will I hear from heaven and will forgive their sin and will heal their land." That is our prayer today. In Jesus' name. Amen.
Amen.
Alrighty. All right, let's take a look at the numbers from around the world. These are the cash markets, or the indices as they're called, starting here in the U.S. The Dow is down 85 points. The NASDAQ is down 58. S&P 500 down 6. Russell 2000 in the green, up 13. In the commodity basket, crude oil down 60 cents, trading 41.35 last. It's a drop of about 1.5%. Gold down $30. Okay. These pullbacks, if you're going to keep the bull healthy, you got to have the pullbacks. Gold down $30.60, trading 20.3880 last. That's a drop of about 1.5%. In the Asian markets at the close, Nikkei down 88 points, Shanghai down 32, Hang Seng down 398, so that's a drop of 1.5%. And in the European markets at the close, FTSE up 5, DAX up 83, CAC up 4. No movers, no shakers. Red day in Asia, green day in the UK. It's a mixed day here in the US of A, with the Russell the only one in the green. S&P, NASDAQ Dow all red, but not by much. They could certainly recover before the day is over. Michael, if you're ready, you can take it away.
Okay, I am ready. Let me log off of that and bring this over. And bring this over. Me. There we go.
Alrighty.
All right.
It's all yours.
I got it. Okay. Good afternoon, everyone. Today is Friday, the 7th day of August, 2020. Today, well, first, if you have not taken a free trial with us, go to the homepage at CFRN.net, and right here it says free 5-day trial. Click on that, and you'll be brought to this page, EminiTradingSchool.com. On this page, all we ask for is your name, your email, your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Now, the information that you put in here, it just goes to us. And it's really good to know ahead of time what your challenges are so we can really work with you during your trial. Okay. Recap. Yeah, where are we? Okay. So today we had gold was all over the place today. Now we started out, well, hang on. First, I got to say this. Today is the 7th day of August, 2020. And if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we lost 11 ticks on crude, made 20 on gold, and 4 on the ES. Put us at plus 140 on the morning session. That's, well, on the month now, we're at $1,693. That's over 5 trading days, averaging $338 per contract per day. And today it took 18 minutes and 3 trades to get to the goal for the day. Okay. So we are now on our 121st consecutive day of getting the goal. On the year, now we're at $55,004. That's over 145 trading days, averaging $379 per contract per trading day, 2-hour trading day. Okay. And, you know, when I get into gold right here, gold was just wild today. I'm going to back it out because there was just so much. No, I stopped trading it after I had doubled my goal for the day. I stopped trading gold. But do you see how crazy this is? Let's look at it on a larger time frame. Gold had a range of, well, the lows right here at 2032, and the high was up here at 2068. So what's that? 36 bucks in gold. It was just wild. And we started out right here. We started out with a stop out. Then we got it all back, plus 4 ticks right there. So we had -8, plus 12, break even, plus 6. This is where we got to the goal for the day, right here. Then on this one, we got 10 more to put us at plus 20. And then I just stopped because it was just getting really wild. And, you know, the YBR trades were working out great. If you were doing the YBR trades, they were working out great today. But, you know, there's so much opportunity in here. You know, there was a long trade. Look at the slingshot. The slingshot tells the story. There was a long trade here, a long trade there. Then we didn't get anything until way over here. A long trade there, a long trade there. Then a short trade there. A short trade here. Now, if you're trading the YBR, there was more opportunity in here. But if you're just doing the trades that we do in the room in the morning, there was a trade there. And, I know I have it backed way out, so you can't see it all that well. But that's because there was so much activity. So much. There was a trade there, a trade there. Trade there. Trade there. And we're only an hour in. And, if I'd have just focused on gold and not traded anything else, it's not fair to everybody in the room for me to do that. So I don't. But if I'd have just done that, I could have easily made $1,000 a contract this morning. The YBR trades, they were rocking it this morning. And, here's one right now that was a YBR. Well, not right now, but back then at 10:35. But it was a YBR trade coupled with a bounce off the BBC. In that trade alone, the entry point would have been 43.5, and the exit point was down here at 41.4. So that's $300, 3 times the daily goal in a single trade. And you only need one of those a day. Okay, that's what I keep telling myself and other people. And in here, a long trade right there. Okay, I'm not going to go through it all because there were just so many opportunities. It was just crazy. Look at the slingshot. Short trade, short trade, short trade. Long trade. Short trade. Long trade. Long trade. See, the slingshot tells the whole story. And, the market was trading so thin today. Gold was, like right now. It's here. Let me show you. See this? 71 by 99. There were times today when it was down in the 60s. And that's just crazy. It's pretty easy to call where it's going to go when you get like that. For those of you guys who, I don't know, I think Val recorded the morning session, or maybe Dwayne recorded the morning session. Somebody recorded the morning session. It was being recorded. And, I was calling out once you get into a trade where I think it's going to go. And I was pretty accurate today. I think I am pretty much every day, but it was just one of those days where, there was a lot on the table. All right, and you see we have the elbow on here right now. I put that on during the morning session to illustrate why the YBR is going to change direction. When price hits the elbow, the YBR is going to change, and the elbow is going to change. See, the direction change on the YBR is based upon the elbow, not the YBR. But I can take that off now. And there. Okay, so this is the euro. On the euro, we had a long opportunity right there. YBR short there. A YBR short here. Now this move right here, you see the black step line had just crossed up above the BBC. So if you were trading the trades in the live trading room, then you wouldn't have had a trade there. If you were just doing the YBR, you still would have had a trade. Okay. Now something came up this morning, and I've been in all the meetings that I've been doing lately. somebody had asked me, well, what about the YBR? And if you get a bounce off the BBC saying it's going in one direction and you have the YBR saying it's going in the other direction, what do you do? And my answer is you don't need to have the BBC on if you're trading the YBR. It takes all that stuff into consideration. And just trade the YBR and the slingshot, and life will be good. So that's why I just did that, showing just the YBR. Okay, and I'm going to put that back on so I can go through the trade setups for the trades that we do in the room in the morning. Okay, so here we go. Look at the slingshot, look up here at price, all choppy, no action. And that was the whole morning. The whole morning on the euro. Yeah, this right here was probably the best trade of the morning. And that was enough to get your goal for the day. This was a decent trade. But yeah, the euro wasn't giving it up today. Yesterday morning, I know I was late yesterday morning, but crude oil's not giving anything up either. See on crude, we stopped out here, pretty much did the tick, and then it went up and did what it should have done. We stopped out again here, pretty much did the tick, and I shouldn't have actually taken this trade. The cycle was going down too steep. And then it went up actually to break even. Then it gave a short trade, and I took 5 ticks on that. So I stopped out there, -8, stopped out there, -8, +5 here. That put me at -11 on crude on the day. It's been a few days since I've been negative on anything. But the YBR short right there, YBR short right there, YBR short right there, and the YBR long right there, and the YBR long right there. Okay, so there was opportunity, plenty of opportunity. On the ES, we only took 1 trade today, this one right here. We picked up 4 ticks on it. I want to say, see, it started out like this. So I pretty much stopped looking at the ES and I was focused on gold. And, because gold was bouncing all over the place. And on the ES, there was not a regular trade, but there were YBR short trades right in here, both of these legs. And again, you only need 1 of those a day. Here's another one right here on the long side. Okay. Keep going. There's one right there, would have been a break even. This one would have been profitable. And using the regular trade setups. Now this is during the break. Using the regular trade setups, there would have been a long trade right there. Capture that move up. And a short trade right here for that move down. Okay, but there wasn't that much opportunity on the ES today. Gold is where all the opportunity was, but it was moving around so fast that, if it's too fast for me, then it's probably going to be too fast for most everyone. So I took what I could out of gold early on, and then I stopped trading it. And unfortunately, I went to crude oil, and I stopped out twice. But it is what it is. All right. So with that, we'll go back here. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 7th day of August, 2020. We lost 11 ticks in crude, made 20 ticks in gold, and 4 ticks on the ES. Put us at plus 140 on the morning session. Today it took 18 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 9 trades. Now, it took 3 trades because our first trade was a stop out on gold, and then we made it up right after. On the month now, we're at $1,693 positive. That's over 5 trading days, averaging $338 per day. We are now on our 121st consecutive day of getting the goal. And on the year now, we're at $55,004. That's over 145 trading days, averaging $379 per contract per 2-hour trading day. And I missed most of the trades, as you just saw. Yeah. We had a lot of news come out today, and it was all good. I'll cover that in just a minute, and then Dwayne will probably cover in more detail. If you have not taken a free trial with us, go to the homepage at CFRN.net. Right here it says free 5-day trial, no credit card required. Click on that, and then scroll down to where it says, where we ask for just your name, your email, your phone number, and you can fill this in if you want to. It's better for you if you do, so we can actually tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click that confirmation link, we don't know that you took the free trial. All right, yeah, the news today. So this is Canadian. You know, it was all good for Canadian, but average hourly earnings month over month, they're anticipating minus 0.5%, and they got plus 0.2%. That means people are going back to work. Non-farm employment change, they were anticipating 1,530,000 new jobs, and they got 1,763,000 new jobs. The unemployment rate, they're anticipating 10.5%, came in at 10.2. The wholesale inventories, that's, well, it is what it is. You know, if you look at it, it's about 40 days after the month ends. So, you know, it's really, I think that's probably why it's low impact, because it's so far after. But, and that was the news today. So, with that, we can pass it back up. Fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
Okay, good.
All right, recap of the recap.
18 minutes, 3 trades, $100 a contract.
Good job.
Thank you.
Good job. All right, guys, Logic 247 for the week. 89 alerts issued. Still waiting on the results of 13. 13 we wrote off, never triggered. 62 actionable alerts. 11 stopped out. That's based on not risking more than $300 per contract per trade. So 17% of actionable alerts were stopped out. The average on any given week over the last 105 weeks, we average about 20%. So not a typical number, a little better than normal. But if we have any more results to add to this later in the day, then of course that number could change. Now the Concierge Trade Alerts for last night, if you want a screenshot of those, here you go. S&P, the Dow, the Russell, Crude, NQ, 10-year notes, gold, Canadian dollar, euro, British pound, silver. Okay. The daily chart. Here we are, just shy of the top of that window of opportunity. Now, if this were to be the high, in other words, we don't put in a higher high today, we don't put in a higher high Sunday night. If this stands as the high, then the fibs from just the last leg up right here, that puts the 24% fib right in here, right in this area that we already have highlighted as potential support, just based on market structure, on the lows of these daily candles. Now the window of opportunity, as a reminder, that was just based on getting above this area of resistance, taking advantage of the opportunity before we run into this area of resistance. This is the all-time historic high in the S&P. I've got it on the continuous, so I'll switch it back. Go. So this bearish cross that took place in February, we knew that would be difficult to get through on the way back up, and it was. After we overcame the first area of resistance on the daily, then we dealt with the second area, and it took 1, 2, 3 sessions. We didn't get through. That sent us back to the BBC, where we found support, and that took us up through the area. Took a couple days to get up through there, and then top of this window was 33.55, but that just represents an area. Okay, the area of opportunity was from above this resistance before you hit this resistance. That's all. So for those of you that got a piece of that, or maybe some of you are still in it, congratulations. That bell's for you. Okay, so we'll see what happens Sunday night. Do we go to challenge the all-time high? Are we ready for that? Is the market ready to challenge the all-time historic highs next week? It's not that far away. We sold off early in the session after the open, but we never took out yesterday's low, but we only took out yesterday's high. Yesterday's high, the Thursday high, was 45.5. Today's high was 47.25. Okay. I'm always suspicious of new highs or lows that only manage to put in this case, a new high by a couple points. So we'll see what the remainder of the day brings. On the S&P last night, the alert was to be long 33.47. 33.47. And that's right there. This swing high was 33.47.25. One tick over the line. Now, blue and climbing always plays a role in good support. Okay? Blue and climbing, we think of support. Red and falling, we think of resistance. This was unique here in that a high of this candle ran right into what at the time was blue and flat. When you've got blue and climbing that becomes blue and flat, that is the CFMA1 on its way to becoming red and falling. So you have to look, even though it's blue, if it's overhead, see, when it's to the right of price, that's good support. But when it gets above price, whether it's blue or red, that's an area of potential resistance that price has to get through. So on the news this morning, the S&P ran up to 33.45.5. But couldn't take out that high. The swing high here was 33.46. And the trigger 33.47 still sits above. Okay. On this move, we just might get through here. We have an alert in the channel to deal with it if we do. So time will tell. If buyers are committed enough to their positions. Congress went home without solving the economic problems we face. The president has said that he would do some type of executive order today, but I haven't watched the news, so I don't know if he's done anything or not. The short side for the ES was 33.21, which is right here. Price hasn't gotten there. Now, the other day when we did this for 2 days back to back, in the discussion group, I talked about when we get near the top, we have something like this, and then we have something like this, which brings us to something like this. One area of consolidation pops up to another level, and then we do the same thing. It's like some kind of layer cake. Just there's one layer, and you put on another layer, and then you put on another layer. Usually the distance between the layers, there's typically more distance between them. In other words, like you have this sideways action, and then you'll have a nice 10, 20, 30 point run up, and then put in that next layer. These layers are pretty close together. Everything oscillating all week, pretty much right at this 24-25 weekly trading zone. That was not the highest zone, it was the next to the highest zone. Highest zone is way up at 34.49, and before we get there, we have to deal with the all-time historic high, which is 33.96, based on the December contract. So we're going up to the top of this range. We've been there once, twice, 3 times. This will be the 4th time. If we get above this area, anticipate resistance at about 33.57. So opportunity, there's definitely a 5-point opportunity overhead if we break out of this area and if we can hold it on a pullback. Okay. Just plug it in my phone before it dies again. Okay, the Dow. The alert last night on the Dow was to be long 27,325. And 325. Right there, close enough. We never quite got there. On that spike up this morning, we ran to 27,318. So if we do break out of this range, the range bound stuff wasn't quite as severe in the Dow as it was in the S&P. We never triggered on the long side, but we came within just a few points. Market's going to make another run. If we get through this area, potential resistance up at 27,395. And then below us, the short side was 27,145. And that's right through here. As I mentioned to you yesterday, if you've had struggles this week, if it's been difficult to trade and navigate, and maybe things seem like they're not working, well, you've got these sideways market conditions. Again, the Dow isn't quite as bad as the S&P, but this part here, you're above the BBC, then you're below, then you're above, then you're below, then you're above, then you're below. That's just the market telling you that for now, this is best left alone. So we snuck out the bottom, got down to 131. Here we made it down to 105. That's about a 30-point move. Now we've seen this repeatedly this week. Price walks up to the CTA, tiptoes over the edge, or either gets right to it and reverses, or in these cases it tiptoes over the edge, but then it has no follow through. That's a lackluster market. This is the kind of market where I hear it time and again. I was doing so good. I had 2 weeks, 2 months, I had built my account, I was up so much, and then in a few days, it's all gone. What happened? Well, the market looked like it was going to take off, but it didn't. And then it looked like it was going to collapse, but it didn't. Rally? No. Tank? No. Rally? See, this morning, I mean, wow, it would have been so easy to get pulled into that news. I mean, this wasn't just a wick. At one point, it was a huge green candle that had taken out this high. Just imagine how many people climbed on board that news. And then it just stopped. It put in a slightly higher high, a couple points, and then collapsed back down to the bottom of the range. Okay, let's go to the Russell. The Russell actually had some movement today. All right, on the Russell, long 1555. $15.55, and we put in a swing high at 63. 7 points, $50 a point, $350 per contract traded. And then we get back below the trigger. Yeah, by a couple ticks. And then we did the exact same thing over again. Market loves to repeat itself. The short side for the Russell is 1539. That's about here. So from 1539 we drop down to 15, we'll call it 32. Now this shorting here into blue and climbing, not a good idea. You want, if you're going short, you want red and falling. If you're going long, you want blue and climbing. Not blue and sideways, not red and sideways. On the short side, not blue and climbing, because you're going to go right into support. Boom, boom, boom. Okay, NQ. All right, on the NQ. Long 11, 281. Same, identical to what we saw on the S&P. 11 to 81. Price rallied up. It hit blue and sideways, or blue and flat, which was on its way to becoming red and falling. So again, I showed you this on the ES. Now here it is again. Okay. The price is on the left side of blue and climbing, be long. But when price starts to walk sideways, that means that the move is running out of steam. So this step line, it steps up and steps over and steps up and steps over until it gets up here, and then it just steps over, and the first red candle that closes below the step line on a long, that would be the exit signal. So this dead ended right at blue and flat, and on this approach we didn't quite get there, so we got a high, got a lower high, and the NQ, unlike the other markets that look as though they want to rally, the NQ looks like it wants to trade lower. Okay, so crude was asleep at the wheel most of the evening. The alert was to be long 42.30, and we never made it to 42.30, or to be short 41.80, which is right here. So from 41.80 we triggered, and then we traced up to the BBC, good resistance, sent us back down, hit the weekly trading zone at 25/30. And then on that news this morning, the good employment numbers. Crude perked up and then went right back into its slump. And it's just been consolidating here at the weekly zone for hours. Let me check and see if John's here. I know he's going to join us today. There he is. Hey, John, welcome to the show.
Hello.
How are you today?
Better, thanks. Quite a bit better, but thanks for asking. Yeah. There's a list on the Zero Hedge called Long Hauler Symptoms. Take a look at that. There's about 98 of them.
What's it called again?
Long Hauler Symptoms.
Long Hauler Symptoms. Zero Hedge. Is it right on the front page, do you know?
If you go down to the search thing, it'll probably show up in there. There it is. Yeah. There it is. Yeah.
This is it right here.
Fatigue is the problem. Fatigue and headaches and stuff like nausea, things like that. So go down a bit more.
Long haulers, okay.
Go down a bit more.
Sure.
There it is. Yeah, it's starting. Fatigue is the number one problem.
Muscular body ache, shortness of breath, difficulty concentrating, inability to exercise.
All of the above.
Boy, that's a lot. That's a lot of stuff. Man,
yeah.
This thing's bad. It's real bad.
Yeah. So, well, look, the market is in danger of selling off here. The last couple of days, if you noticed, some of the high flyers were starting to come off, like Zoom, for example, and ZI is another one, ZS, Zscaler. All of these are coming off today, and these have been some of the strongest stocks. The one I pointed out yesterday, HZNP, but that's Zscaler, pretty incredible.
What is it now? H what?
Yeah, you see what I mean? You see how they just the last couple of days they started to give it up.
What was that symbol, John?
Sorry, HZ, Zulu, NP. This is actually a pretty extraordinary company. It had a run a few years back, and then it kind of pulled back a bit. And then since it's low in March, when it got knocked down, it's really gone on fire. And as I pointed out yesterday, it did come back a bit. Actually gave me a sell signal the day before, actually, right at the top, and came back, and now it's making new highs again. So it really is very strong. And I'd probably say this thing, I mean, look, the market's coming down, and this thing's holding up today.
Is this involved in the race for the cure, the vaccine?
No. I think it's a different thing, but they're look at there's something that they're doing. I haven't really investigated it yet, but from March, obviously, this thing's been on a tear. The other one is T-Mobile. We picked that as the number one contender probably more than a year ago or two. And it's absolutely...
Yeah, it's been a while. What's the symbol?
It's broken out about TMUS. It's coming off a little bit now, but, the fact that it's broken through not just 100, but is going towards 120. Usually when these stocks break above 100, they go to at least 120, sometimes to 130. And then they can come back again and maybe test 100. So... But it definitely, I think T-Mobile is really, they have a potentially better lock on the 5G than anybody right now. They actually have 5G operating, so if you have a compliant 5G phone, theoretically you're a 5G user, and the speed is mind-blowing. It's gigas of velocity apparently. So today, look, this is the first. By the way, we called the highs on the metals last night. Just got up to 30, and I had a feeling the silver was going to come off that 30. It got to 29.90. Remember when I called a high on the silver back in 2016? When was it? Sorry, 2011, 1st of May. I said it was super strong, and then it kind of went to jelly. It kind of did the same thing last night. It just kind of went to jelly up around that 29.
Yeah, we're waiting for a pullback here. This is a daily chart. If we could get a 50% retracement of just this last leg up, that would put us back at about 23.65.
And it's going to mean that there's going to be a lot better two-way trading, a lot of opportunity, and obviously the next time it pushes through 30 is going to be a big deal because it's probably going to go to 36. But to be fair to me, I call these numbers on this show right up to these levels, weeks and months ago, and with my definitive analysis report, which was called The Alchemy of Our Financial Destiny, has absolutely, performed to the letter so far. And we still potentially, I think if we get a test of the 2000s or 1900 on the gold, I think the next move up will probably be to 2700 on the gold, and possibly even as high as 55, 65 on the silver. There's probably some uses of silver that are going on now that we don't even know about, that are suddenly increasing the demand because this is...
They're even in some of these masks. They use silver for
exactly. Yeah, and this is the... well, look, the first thing is I'd be careful going long or staying long over later today unless we rebound very sharply, which doesn't look like the case right now, because for the last many weeks, going long gold on Friday was a winner, and silver, and may not be this weekend. It might actually be a loser. So, I'd be pretty careful. Oh, by the way, the transports, check out the transports, Wayne. They just look like they've broken back over 10,000, which is a very, very good thing. The fact that we're down to 10.2% unemployment, created 19 million jobs in the last 3 months is really something phenomenal. The U.S. economy is back with a vengeance in terms of delivering on the expectations of the market so far. One of the problems is, for a market like we're in, like today, is that when the news actually gets delivered, it actually can cause the stock market to go down, which is what's happening today, especially with the NASDAQ and not so much the Dow at the moment. But, if we can, if this is not too much of a pullback here, if it doesn't turn into a wipeout or something, we're probably going to have another, we're probably going to work our way back up towards the highs next week. However, all of the fangs are down to all of the, I'll go down today. That's a problem in of itself. The last couple of days, the ones that were sort of real high flyers a couple of days ago are also succumbing to a pullback. They started, you could sort of see that they were, the dam was starting to give way a couple of days ago, and that's basically happened. I don't know whether I should ask this question. But
that's a very bearish candlestick pattern there, dark.
It actually is. It actually is. And that's an interesting.
This stock back to $400 and maybe even 300.
Dwayne, that I got a photographic memory, and that setup was very apparent in 2000, right before the wipeout. Where it made a big advance, came back, made a kind of a sideways ABC, sort of feeble rally, and then tanked, afterwards. and you don't even know if it's an ABC, like if it's a C wave down, or whether it's a beginning of a bear market. It could be either one. But that's what, in 2000, it was the beginning of a bear market. So you have to respect these things. And right now, the market's kind of starting to come off. When you get the ZMs, the Zooms of the world, coming off as rapidly as they are starting to right now, it's a little bit troubling. So, it certainly looks like we might come back to 225 or 200 on this Zoom. One stock that's I want to remind people about. In early 2018, I highlighted this stock at 50. It actually was $45. You know what I'm going to tell you to put in?
No, what?
It was TTD, and I made a comment that day.
Trade desk.
Correct. I made a comment that day. That very day, I highlighted that stock at 45. I actually said it was the fastest growing stock I'd ever seen. And as you can see, we've hit a 10 bagger on this one since then. So and look at the acceleration from the March bottom. It's been pretty incredible. I mean, when you compare it with Google, and I said it was kind of outperforming Google at the time. It obviously, Google's gone up a little bit, but this one's obviously outpaced it dramatically, and it's not really showing any signs of decelerating, other than that doji that's developing, which is a problem probably for even this stock today. So there is, remember we've had a pretty incredible, we have the greatest rally of all time. And now we're coming off rather, we're kind of starting to accelerate down a little bit. So it's definitely a kind of a sell short type of day, and get worse. So that's the way it looks to me today.
All right, John.
Okay, doke. Well, listen, have a great weekend.
Thank you so much.
Okay, thank you.
All right. Okay. So on gold, short alert was 2067. We traded down as low as 2038. But again, these pullbacks in a bull market are very important. And as you can see, we haven't had a healthy retracement in quite a while. Had a little small retracement there. Now this one, this is spot gold we're looking at. This is a bearish engulfing candle. That's one of the, that's probably the most. Now, here's this one. In a perfect world, I would like to have seen this entire red body engulf the entire candle, but this was the high, this is the low so far. So I mean, if we close anywhere in this area, anywhere below the low of yesterday's candle, it's a bearish engulfing candle on the daily chart of spot gold. Now if we go to the futures on a daily, the high today higher than yesterday's high, low lower than yesterday. So a pullback here, let's look at it on this chart. We'll clear all this. We'll make this gold. So if we just look at the last leg up on gold, that puts the BBC right here, right now, about 38%. If we draw fibs for the entire move, like that, now we see that the 24 of the entire move overlaps with the 38 of just the last leg up. And throw the BBC in there. So that's a great area to get a pullback to. Now, will that be enough? Will that be deep enough? It'll keep us going, but a pullback to the 50 or the 62, then that would give us lots of room to run on the upside before we hit. Now remember, this isn't just any high. This is the all-time historic high. That adds a whole nother dynamic. It's a different issue with silver because silver is still quite a ways from its all-time historic high. But each tick that gold makes above, right, let's see, yesterday the high was 2081.80, and today it was 2089. So popped up $8, and then the bottom sort of fell out. So the shallowest possible retracement would be the 24% fib here around 1995. Then below that, this is the one I'll be watching for. Now we won't just park an order there to go long once price gets there, because once price gets there, we don't know what price is going to do. Price might just keep going. It might want to see the 50. It might want to see the 62. Now we've got overlap again down here. The 62 and the big picture 38. So if this one doesn't hold, and this one, then there's two reasons to hold here. Time will tell. Are we ready to start shorting gold? Well, anytime price is below the BBC and you're not stuck at a range, right? If we were to get a bounce up to the BBC, that would give us an excellent opportunity to be short. So that is a wrap, as they say. So for the last 3 days, we've talked about how to deal with difficult people. So let's end the week, day 4. Romans 12:19 says, "Do not take revenge. Do not take revenge, my dear friends, but leave room for God's wrath, for it is written, 'It is mine to avenge, I will repay,' says the Lord." Jesus said in Matthew 5:38, "You've heard that it was said, eye for an eye and a tooth for a tooth. But I tell you, if anyone slaps you on the right cheek, turn to them the other cheek also." Though the eye for an eye statement sounds harsh to us, it was actually an enormous step forward in the ancient legal world, where powerful people could kill you for the slightest injury. This law limited retribution by teaching proportional justice. So in other words, this was a good law, because it says, you can't take 2 eyes for an eye. It's an eye for an eye, tooth for a tooth. But it still leaves us with a problem. Instinct says if someone hurts you, you hurt them back. And the pain you experience always seems worse than the pain you cause the other person. In an experiment, a group of subjects were paired up and each person received pressure against their finger. Then they were told to exert the same amount of pressure on the other person's finger. When it was their turn, they always inflicted more pain than they received. Always. The result is an eye plus a little something extra for an eye. Now that's an interesting study, and I don't know anything about the background or history of it, but why would that be? Oh, that's rhetorical. I'll leave you to sort it out. And so you say, but this person hurt me and they should pay for it. How much should they pay? God alone is capable of answering that question fairly. And his word says, do not take revenge, my dear friends, but leave room for God's wrath. For it is written, Romans 12:19, it is mine to avenge, I will repay, says the Lord. On the contrary, if your enemy is hungry, feed him. If he's thirsty, give him something to drink. In doing this, you will heap burning coals on his head. Do not be overcome by evil, but overcome evil with good. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.